Hi, I'm Dawn Poland, and I help owners of commercial real estate capture tax incentives that inject vital cash into their business today for a more profitable tomorrow. In today's video, we're going to discuss what is cost segregation in very simple terms. We're going to talk about who can benefit, how does this benefit you, and why do you need to have a cost segregation study completed in order to capture this benefit? First, who can benefit? I always say, follow the money. If you have spent money to purchase or construct real estate, it doesn't matter whether you paid cash or you got a loan. You will be the one entitled to the deduction. You're the owner of record. At the same time, if you have a tenant space, you don't own the building, but you've spent money to fit out your tenant space to your specifications, you have also spent money on real estate and you are entitled to that deduction. Follow the money. 2, how does this benefit you? It benefits you by increasing your depreciation deduction in year 1, thereby reducing your federal and your state tax liability. This can increase your deduction so much that your tax liability can go all the way to 0. If you have excess deduction after you were paying no tax for the year, that deduction can even move forward as a net operating loss into the future years and reduce tax then. Number 3, why do you need a cost segregation study completed in order to capture this benefit? Well, you know how much money you have spent for your building, but what you don't know is how much of that money is allowed to be put into a shorter class life. The specific items have to be identified in your building and a value associated with them, and them all added up to be able to put them in a shorter class life. Let's take a look at what that looks like on paper. When you purchase or construct a building, you know what your total cost is. In our example, we purchased a building for $2.5 million. At this point, you know there is components of that building that qualify for a 5 or a 15 or maybe even a 7-year class life and can get accelerated depreciation on those items. But you have no idea which components and what the value of those components are. So all you can do, all your accountant can do at this point is to put your whole $2.5 million that you spent into the longest class life. That is per the IRS guidelines. In our example, that means our current year depreciation is going to be $61,431. Now, let's say you had a cost segregation study completed. Once that is completed, you have the information that you need in order to be able to put some of your spend into a 5-year class life or a 15-year class life and accelerate the depreciation on those items. Our result with our example is that now our first year depreciation is going to be $861,858. That is a huge increase. And now you can see why that big pop in depreciation taken as an expense all in 1 year can reduce my taxable income all the way down to 0. I hope that was helpful in explaining who can benefit, how you can benefit, and why you need a cost segregation study completed in order to benefit from cost segregation. If you have any questions or comments, please put them below and we'll get right back to you. Remember, cash today is worth more than cash tomorrow. Let me help you today.